Hi there. Thanks for getting back with me. I wanted to follow up with you on some of the questions that you had. First of all, I want to say that I've really appreciated getting to know you guys and the business, and hopefully, as we go throughout the years, we can find ways to just help maximize your situation to the best possible way. First of all, the amount that you owe is going to appear at the bottom of your 1040 page 2, and that is $23,776. The deadline for filing is April 15th. It's actually April 17th this year since the 15th falls on a holiday. And the way that will work is you had set up your bank account. I believe we had done it through Bank of Oklahoma. And so your account will automatically be debited. I'll be sending forms for you to sign to verify me as a third-party filer. Or a tax preparer for you, but then your account will automatically be debited on the 17th to pay for that balance due. On Schedule A, you had asked about the difference between the deductions that were listed and a different total at the bottom. Basically what that comes down to is on these deductions, you list out what you have, but then there's a corresponding form that we fill out that basically shows what amount of those deductions you get. Basically, when your income's a certain level, part of the deduction phases out. And so in your case, the deduction total came to $20,305. So because your adjusted gross income was $416,000, basically, part of that was phased out. So we're still able to capture a good portion of that, but that's why those numbers don't, aggregate and sum all the way down to the bottom. On Schedule C, you had talked about some changes that were different from the income statement that was submitted. For that, what was submitted included some things that basically we can't count as expenses on the business side, things like charitable contributions. And then on the meals, you had $15,000 listed for meals. Tax provisions only allow us to expense 50% of those, so that's why the meals presented were $7,500 expensed. One thing that was really beneficial, though, was the depreciation amount listed was $121,609. Looking at the tax depreciation, some things we were able to expense and depreciate this current year, some items that were purchased, it gave us a total of $318,000 for depreciation. So basically $200,000 more, which meant $200,000 less in income, thus decreasing your taxable income. And on the top of schedule, or the top of page 2 where it lists your tax due, you'd ask about the tax bracket. That falls in the 33% tax bracket. Next year, Congress is enacting a law that's going to change that tax bracket to 32%, but just under $400,000 is where the cutoff is. So if you were to exceed that, then you would be in the 35% tax bracket. Looking at some things for the future, you will be filing married, file jointly. This was our last year we were able to do qualifying widow. And so you will receive the same benefits as you did the previous year. You'll be in the same filing status. Some things to consider. You may want to be thinking about, as your business is growing, incorporating it. That's going to do some changes on how income passes through to you, but potentially it's going to lower your personal income, and might be a situation that we can discuss further, changing the basically designation of your business. Also, the Food Network has a 401k for you. I would consider opening a traditional IRA as well. You can have a 401k that's matched by an employer and an IRA. With an IRA, you're putting pre-tax income in there. And so basically, you are lowering your taxable income. And it's going to grow. You will pay taxes on it when you pull it out down the line. So that's something we can discuss as well. A final recommendation I have, I'm sure you know with Sam how costly it is to pay for his schooling. I would like you to consider opening a 529 account. It's an educational account for Adam, who's not even 1 year old yet. And so basically, he's a little bit older than one. But what's going to happen is that money's going to grow tax-free, and that's going to be less that you have to pay out of pocket when he's actually in college. So that may be something we discuss, and we can bring in a financial advisor with. I wanted to thank you for the opportunity to work on your taxes, and I look forward to any conversations that we have down the road planning. Please let me know if you have further questions, and we'll talk to you soon. Bye.